What a week we have had. So many interest companies reported earnings, some of them crashing and others are up a lot. Hello everyone, welcome back to the channel. Today I want to talk about Square or Block, as many of you DM me asking me about this company. I will most likely do another video like this one on Fubo TV and Wish along the next week. This is more of an in-depth analysis video about the company, so we're going to talk not only about their financials but also what is going on with each of their businesses, what have they released and improved, and more. If you're new to my channel, welcome. Please consider subscribing and smashing that like button since it really helps the channel out. As you can see, I'm in a hotel right now as I'm in Uruguay at this moment because I had the appointment for a tourist visa. Now, first of all, the day they reported, the stock was down 10.5%, and after they reported, it went down big and then up 8 to 9%. At first, it went down because it missed analyst expectations in both revenue and earnings, but after their conference call and after we read the report, we understood what really happened. They first completed their Afterpay acquisition, which we talked about in this channel, and allocated 50% of their Afterpay revenue and gross profit into Square and Cash App. As of the end of the first quarter, more than 10 million Cash App accounts have bought Bitcoin since the product was introduced. In summary, they saw a gross profit of $1.29 billion, which is a growth of 34%. Cash App gross profit grew 26%. Square gross profit grew 41%, and a huge net loss of $204 million, which sounds terrible. But they explained it was mainly because they recognized unrealized gains of $50 million driven by the revaluation of equity investments, as well as Afterpay related transaction charges of $42 million of one-time deal and integration related expenses, $31 million of amortization and acquired intangible assets, and $66 million of one-time accelerated stock-based compensation. As they mentioned, they had an impressive growth at scale during the first quarter, with a gross profit up 34%. Still, Afterpay contributed $92 million of gross profit in the month of February and March, with $46 million of gross profit from Cash App and Square. So, excluding Afterpay, they had a gross profit of $1.2 billion, which is up 25% year over year, meaning that their main business, their core business, continue having a nice growth and improvement. Now, for their Cash App business, they started rolling out the ability for teens to deposit paper money at some retailers such as Walmart or Walgreens, which they believe could drive further inflows into Cash Apps, which I believe it is a great idea. Historically speaking, teens have a higher mix of cash in their spend compared to others, as almost everyone prefers to carry credit or debit cards than cash, while teens are not that used to having a card on their daily basis. With this, Square believes underscores the opportunity to enable more teens to take advantage of the secular shift towards digital assets, which could bring Cash App a higher growth, as those teens will be used to their platform, to their system, to their banking and service that will most likely continue using their ecosystem while they grow. Now, Cash App also announced that US customers can now send and receive Bitcoin to anyone with a compatible wallet via the Lightning Network, which, to be honest, sounds pretty nice, as typical transactions conducted directly on the Bitcoin blockchain can take a lot, something like 10 minutes. Now it's nearly instant with Cash App over the Lightning Network. The most benefited by the Afterpay acquisition is obviously the Square ecosystem, as since integrating Afterpay's buy now, pay later functionality with Square Online and e-commerce API in the US and Australia, they have seen nearly 13,000 Square merchants adopt the process buy now and pay later through the first quarter, which grew Afterpay active sellers by 10%, which in my opinion this is incredible, as they will also offer it for in-person payments with time, and I believe this could help merchants grow while Square grow as well. For example, 2 weeks ago I bought a new LG curved monitor with the Ergo arm, which cost me about $800 or $66 monthly for the next 12 months with the Amazon credit card, which I already have. And even though I could pay the $800 today, I prefer to pay it monthly, as they were not charging me any interest, and I could invest those $800 today during this market crash. And I believe that helped merchants as well. Also, Square announced their newest version of Square Stand, which helps sellers take in-person payments and manage e-commerce sales, deliveries, and in-store orders from a single place. Now, Square also expanded their offerings in Canada with Square Loans and on-demand delivery. Square Loans give credit access for sellers in Canada, helping them manage their cash flow and grow their business. With Square On-Demand or online, sellers can offer third-party delivery to customers directly from their own website. Now, their website loyalty program was already available in the US, Canada, Australia, and the UK, and now they launched Square Loyalty and Square Marketing in Ireland. And what is that, you might be asking? Square Loyalty is mostly a customized loyalty program which rewards customers both in-store and online, which increase repeat visits. Something like what Subway and many pizzerias used to do, that they give you a card and after you bought about 10 pizzas or 10 subs, you would get one free. And Square Marketing is a tool to retain and re-engage their customers through repeat visits, increasing buyer spending and growing their customer base, which obviously this is more than beneficial to the merchant that use Square, but this will also grow Square, not only because those merchants are growing, but also because they are offering services that new merchants might want to start using as well. Now, the most important part after knowing everything about a business is to check their financials. They reported a total revenue of $3.96 billion, down 22% from $5.07 billion, which might sound concerning, but in my opinion, their revenue going down is not something to worry about. At this moment, as we can see, that their transaction revenue-based revenue was $1.23 billion, up 28% year over year. The subscription and service-based revenue up a whopping 72%, and their hardware business grew 29%. So basically, we can see that their revenue decreased 22% year over year only because of their Bitcoin revenue that decreased massively from $3.5 billion to $1.7 billion. So excluding Bitcoin, their total revenue in the first quarter was up 44%, which is why I have been saying that if you invest in this stock, you gotta understand that 50% of the revenue comes from Bitcoin, which is a slightly profitable business, not like the others, and a very volatile one as it depends on Bitcoin, which is down massively this year. But the rest of the business, in my opinion, is really appealing. Still, we can see that the most profitable business is the subscription and service with a gross profit of 80%. Lower than last year, sure, but still incredible. And we can see that even though their Bitcoin business decreased massively, their gross profit actually improved from 1.2% to 3%. Now, operating expenses were $1.52 billion, which is up 70%, which obviously is a lot. Mainly costs related to Afterpay transactions, including $42 million of one-time deal and integration-related expenses. Now, on their balance sheet, they report a total current assets of $11.86 billion and total current liabilities of $6.03 billion, which would give us a current ratio of almost 2, and that is incredible. Now, they also have $29.13 billion in total assets, which we can see grew massively since December, but it was mainly because of the goodwill that they now have, and you guys know that I don't like to take into consideration goodwill at this moment. So without goodwill, they have over $17 billion in assets and $11.6 billion in liabilities, which is completely fine. Now, for the second quarter of 2022, they believe 3-year compounded annual growth rates from 2019 through 2022 will help reflect underlying trends in each ecosystem. And in my opinion, or my thoughts are that you guys know I have been investing in Block or Square since 2020 and have always liked their business model and how they have been diversifying and expanding. I understand the risk of investing in this company, but I love what they have done and how they are expanding and growing while helping their merchants to continue growing as well. I believe the company has a lot of potential in the long term, and I believe this drop is actually giving me a nice opportunity to buy below $100, which is in the short term it might be really scary, with all this volatility and uncertainty, but in the long term, it might be very beneficial if everything goes as planned. I will leave you here a video recommended by YouTube and here for you to subscribe. Thank you and see you next time.